We're talking about examples of tax-deferred contributions.
Would that be like pensions in general?
So yes, if I put money into my pension, it's tax-free. If my employer pays into my pension, does that show up on my W-2? No. What are these guys, HSAs? Pre-tax salary reductions exempt from FIT. Right, how does an HSA work? Anybody remember? I think in that example, I take money out of my paycheck, I put it into an account. I don't have to pay health insurance on it, or I'm sorry, I don't have to pay FIT on it. And then when I want to pull it out to pay medical bills, I can. Why is that a benefit? Sounds like a lot of work. Why would I want to do that? Yeah, I'm putting money to pay my medical bills pre-tax. So if I earn 15 bucks an hour, I can put the whole $15 in and pull it out to pay my medical bills. Otherwise, I have to pay tax on it, and then, what's left is $12. So, you can only fund an HSA, and this is asterisk right here, if you have something called a high deductible health insurance plan. And that means that, so if you've got a really good health insurance plan, like you've only got like a couple $100 a year deductible, which basically nobody has anymore, but if you did, you couldn't, the IRS wouldn't let you do an HSA. You can only do them if you've got a high deductible health insurance plan. And then the other thing that they're talking about here are Archer medical savings accounts, but we don't really use those anymore, so I'm not going to worry about that. So just back to this whole,
Does that have to be provided by the employer?
one more time, the Archer.
Yeah.
I can't even talk about Archers. Nobody uses them. I think that's also like an HSA, but it's got a small limit on it. So nobody really uses them. I think there's like less than 100,000 of them ever set up. Okay, and then just to go back to these, so I can see that you guys are not maybe able to regurgitate all this, so let's listen to it all again. These are other examples of pre-tax salary reductions. Okay, anybody remember what a cafeteria plan is without reading it? So that's when my employer gives me a chunk of money and then a laundry list of benefits I can choose from. Cafeteria plans, like you go through, you pick and choose what serves you best. Okay? So that's all pre-tax. So for example, here's the University of Montana, but well, anybody that works for the state of Montana, you get a chunk of money every month. And then it's like, do you want dental insurance? Do you want health insurance? Do you want disability insurance? What do you want? And that's all pre-tax. These are all things that are mutually exclusive. In other words, you don't package these things together. They're different examples of stuff you can do. Or you can fund a flexible spending account. And I told you this is really critical. There's one thing that's extraordinary about flexible spending accounts. Anybody remember what it is? You don't just not pay federal income tax, you get out from underneath FICA on it too. You pay no tax on it. It doesn't even show up on your W-2. So it's not taxable for anything. So it's really literally the only thing I personally know that you don't pay FICA on. And you can do that up to $2,650 a year. You put money in your flex, and then when you have healthcare costs, you can pull it up and pay for your healthcare. Okay? And they don't have FIT or FICA without, and if you don't use the money, then you lose it. So you better remember, or you better have $2,650 worth of out-of-pocket medical costs. It's also dental, optical, prescription, PT, anything like that.
Is it annually?
Annually. Yeah. Anything like that, you can pull that out and use it pre-tax. Okay. Has anybody ever heard of a flexible spending account? They can save a ton of money. The higher your tax bracket, the more money you save. And why do you think employers like these? you're not paying FICA against what they're not doing. They're not matching it. So anything, it's an easy sell to an employer because they save 7.65% of every dollar that their employees put into it. Okay? Okay, health savings accounts, we just talked about those. Oh, and then here's the numbers for having a high deductible health insurance plan. If it's only for you, you can't have less than a $1,350 annual deductible or $2,700 for a family. What's an annual deductible again? What does that mean? Like my annual deductible for my health plan is $2,500. So what does that mean to me? Yeah, I've got to pay that before a penny of insurance kicks in. So that's not nothing. You know.
Could you pay that chunk all at once? Or you just pay them
It depends upon like what happens. So in that $2,500, great question. Certain things are included there, like my annual mammogram or my well check. Like stuff like that, they just have to cover. So all I'm out of pocket for something like that is like a $25 visit charge. But say that I need to go to physical therapy because my back's hurting. And every time I go to physical therapy, it's $180. I'm going to pay that bill every single freaking time until I get to $2,500. And then my insurance will kick in. But the thing is an annual deductible the same as your annual out-of-pocket? It's not. That can be even more because your pharmaceuticals might have a separate annual. I mean, health insurance is like, yay, great, I've got health insurance, but make sure that you understand what it is. Because and then if you've got in a family, it's like $2,500 per person. So your kid gets bronchitis, and your other kid breaks his leg, and you need to go to PT. I mean, it's per person. So, yeah, I mean, that's sometimes feels like a little bit like a racket. Okay, tax-deferred retirement contributions exempt from FIT. Super big mouthful. This is your contribution to your 401k. Your contribution to your simple, your SEP, your 403b, anything like that. So it's money I take out of my paycheck, funnel directly into a retirement account without paying federal, state, or city income tax on it. So it's tax-free for everything. That is a huge benefit for me because that grows over time. That money grows over time without ever having a tax bite out of it. So that's pretty extraordinary. And these are just examples of retirement plans. There's a whole bunch more, but the most probably you guys have all heard of a 401k. Yeah. And a 403b is just the same, but for a nonprofit. Like here at the university, because we're a nonprofit, we have a 403b. Yeah, and simple, et cetera, et cetera. Now, you still have to pay FICA on the amounts you put into a retirement plan, so you don't get out from underneath that.
You still pay that.
Sure. So when I put money into my 401k or my 403b or whatever, they take the money out before they go calculate the federal income tax and state income tax. But the FICA is calculated on my full paycheck. Let's maybe do that really quick. I think that's important. Let me go through this screen and then we'll do an example of that. So IRAs, how much can you put annually into an IRA? $5,500 or the lesser of your earned income. So if I only work very, very, very part-time and make $3,000 a year, I can only put in $3,000. If I make $50,000 a year, I can put in $5,500, or if I'm 50 or older, I can contribute an additional $1,000, $6,500 a year.
Why do they put a cap
Because they don't want, if I'm a doctor, they don't want me putting away 200 grand a year tax-free. Because I'm never gonna spend that in retirement, and I'm just getting permanently out of income tax. Forever, this number was $2,000, which no one's ever gonna retire if all their saving is $2,000 a year. You're never gonna retire if all your saving is $5,500 a year. But it's a start. You can do this in conjunction with other things.
Whatever, yeah.
Okay, so, and then anybody familiar with this term, Roth IRA? A Roth IRA is exactly opposite of a regular IRA. With a regular IRA, you put your money in tax-free. You get the write-off up front. And then when you pull it out and you retire, it's taxed. A Roth is exactly opposite. You don't get to deduct anything. You don't get any tax benefit for it up front. But then when you retire and pull it out, you don't pay tax on it. So it's a little past our scope, but different people, you would choose between a regular IRA or a Roth IRA depending upon your situation in your tax bracket based upon when you work versus when you think you're going to retire. Most of us when we retire are going to be in a lower tax bracket because we're not making as much money. But if you're somebody that's set to inherit or sell a business and you might have higher tax bracket retirement, then you would absolutely want to go with Roth. So let's just do an example so that I can kind of illustrate what we're talking about. So write this down in your notes, please. So I've got somebody that makes a salary of $45,000 a year, and she's paid monthly. She makes 45 grand a year, and she's paid monthly. And she wants to put away $400 a paycheck into her 401k. Or same example, but she wants to put, let's see, sorry, that's too big of an amount to make a comparison. She wants to put $200 a month into her 401k, or she wants to put $200 a month into a flexible spending account. And this isn't how you do it, but just pretend that she pays 10% federal income tax. What I want you to do is, or what we're going to do, is set this up. I want to see her gross paycheck, all of the things you have to withhold from it, and then what her net paycheck is. And we're going to compare these two things.
40,000 or
She makes $40,000 a year. She's paid monthly. So the first thing I want you to do is to obviously figure out her gross paycheck. It's going to be the same for both. And then I want to see if you can figure out what's the difference between putting that money into a flexible spending account and 401k. What is the difference when you go to figure FICA and debt? You subtract that amount for both of them when you figure it. And you do because they're both pre-tax, right? You don't pay federal income tax on either of those things. With the FSA, do you pay tax? Do you pay FICA? Let's walk through this together. Figure out her gross paycheck for me, please. We'll walk through it together. Figure out the gross paycheck. How much does she make a month? 23, 33, 33? Okay, great. Now, on both of them, the first withholding, in other words, the first thing we're going to subtract from the gross is either the 401k or the FSA. So subtract that. Just like we've been doing these before.
It's not both, it's either or.
Yeah, we're doing a comparison, one to the other. So minus either the FSA or the 401k, depending upon which column you're in. Okay, then what other kinds of things do we have to hold out of our paycheck? What taxes? Michaela, what's one of the taxes we got to subtract?
HI.
Yep, so minus HI. Tyler, what else? OASDI, and Katie, what else?
From her loan paycheck.
Yep, we're just running a paycheck. And we also got SIT, but we're not dealing with that right now. I'm trying to get down to our net paycheck. With HI and OASDI, how are you going to calculate that for the 401k contribution column?
So you're going to subtract the 200 from the 2,333.
Okay, so you don't think you pay FICA on a 401k contribution? You do pay FICA on it, so you don't subtract the $200. You do pay FICA on it. You don't get to subtract the $200 before you calculate FICA. Okay? But I don't pay federal income tax on the $200. So before I go calculate that number, what do I have to do? Subtract the 200. So calculate the paycheck for the 401k. The only thing you get out from underneath on a 401k is your income tax. And again, this isn't how you do it, but I'm just giving you a flat 10% rate. So if the HI and the OASDI, no big deal, just multiply by the gross, right? For the federal income tax, I have to subtract the contribution to the 401k because we don't pay income tax on it. Did you get that number? So 33 minus $200 is the amount that I multiply by 10%, right?
So I did equals 33.33 minus the 200 bucks. And then I took that all times 10%. Because I don't pay tax on it, right?
So is the FIT, is that always 10%?
No, that's what I'm saying, this isn't even how you do it, I'm just trying to illustrate
Oh,
that, yeah, no, there's lots of different tax rates, and we're gonna use the tax tables for that. Now go ahead and run her check. If she doesn't put 200 bucks into a 401k, she puts it into a flexible spending account. What happens with the flexible spending account, James? It's different from the 401k. Does she pay federal income tax on the 200 bucks? I don't think she pays any taxes with the FSA. I think she gets to pull that $200 out and put it into her flexible spending account. She doesn't pay any taxes on it. That's the only one you get out from underneath FICA on.
So I think for that one, is the HI and the OASDI the different or the same? How much is my taxable base? I think I only pay the OASDI and the HI on the difference between the gross and the amount I contributed, right? I pay less HI, right? Why? Because I don't have to pay FICA on the amount I put into a flex spending. Same with OASDI, same with VET. Why does this make sense that the paycheck that has the 401k is less than the paycheck where she contributed to an FSA? Can anybody wrap that up for us and make sense of that? Why does it make sense that the paycheck with the 401k is less? Yeah, because you don't get out from underneath FICA on a 401k contribution. Does that make sense? Okay. So let's keep going here. So the next question is, if you can turn to page 4-11, just mark the tax tables that I had you open to. put a pencil in there or a sticky note or something. And let's go look at I guess I'm going to have it up here. You don't probably need to even turn to it. Let's go look at where is it? There we go. Okay. What a W-4 is. You guys have all filled these out, right? Anytime you go to work. So the first thing I want to talk about is right here on number 3, single, married, or married but withholding at a higher rate. Why would I ever want them to withhold tax at a higher rate? Any ideas? Why would you want more tax held out of your paychecks? I'm going to owe less at the end of the year because maybe I've got something else going on, like a rental or interest income or a small business, right? And then number 5, or line 5, the total number of allowances you are claiming. You get one for yourself and one for each dependent. And the definition of dependent is identified in the tax code, the Internal Revenue Code. It's basically, well, there's kind of a wide swath, but for most of it, it's our children. For most of us, it's our children. But you could also, if you were supporting a parent or a nephew or a grandparent, you could have other dependents that aren't necessarily children. There's a lot of rules around it, though. So are you going to get more, or if, say, you're single, no kids, are you going to have more or less taxes taken out if you file 0, if you claim 0? You're going to have higher amount of taxes taken out? Yeah, 0 dependents means I've got nothing to write off on my tax return. Please take the maximum amount out of my paychecks. This person has 4. So it looks to me like it's either a single person with 3 kids. Well, it is because they hit single. So it's a single person with 3 kids. So they've got 4 dependencies. Line 6, additional amount, if any, you want withheld from the paycheck. Again, that would be if you, for any reason, had something else going on and you wanted them to hold an extra $100 a month out of your paycheck. You could do that there. And then this one's pretty important, number 7. This says I'm claiming exemption from withholding. In other words, don't withhold from me at all. The only way you can instruct your employer to do that is if you didn't owe any income tax last year and you don't expect to owe any income tax this year, right? Like, I couldn't just be like, oh, I want to be exempt, right? You've got to essentially be pretty low income and you didn't owe any tax last year and you don't expect to owe it this year. You don't want your employer to hold money out because you're just going to need to file a tax return to get it back at the end of the year. So you give this to your employer, what do they do with it? Do they send it to the IRS? They don't actually, I think they just use it and input into the payroll software. And that, based on this information right here, is how you determine how much tax to take out of paychecks. So let's practice a couple of those. Okay, I'm going to come back to these, but I really want to try this. Okay. So the first thing to tell you is that the tax brackets in your book are actually not even valid anymore. There was a major piece of tax legislation signed in December of 2018. 2017. Right here, 12/22/2017. And tax brackets changed, personal exemptions went away, a lot of things changed. But just because these are the books you have, we're going to use those, and that's how I'm going to test. The brackets have changed quite significantly. Okay, so go to Appendix T, please. And the first thing I'd like you to notice is on page T1, T2, and T3 is something called the percentage of withholding method. Yeah, pages T1, T2, and T3. And so maybe even highlight that. It says up at the top of page T3,
percentage method. So make sure you see that. And then also on page T2, make a little note on top of that, that you have to subtract. You have to subtract the table of allowance values before you go to page T3. And I'm going to show you how to do that. But you have to use that table of allowance values on page T2. So just to note, have to subtract before going to page T3. And again, I'll show you how to do this. So this method here on pages T2 and T3, it's kind of tough. It's a little bit tougher. If you flip a couple more pages to page T5 and forward, then, I'm just going to hold this up so you can all see, these are the wage bracket tables, and you need to turn sideways to read them. And the first thing you do is you look at this little box in the middle that tells you how often you're paid and whether you're married or single. And that's how you use them. So we're going to practice that. So basically what this screen says is, to calculate, use the wage bracket method. That's the one you just go look it up on the table. And 10 out of 10 times if you can do that, that's what you're going to use because it's easiest. But sometimes you have to go to the percentage method. And that is when you have somebody that's highly compensated, or they're paid on some weird time schedule, like once a year or twice a year. I mean, I don't mind if it's paid once a year or twice a year, but the reason that we go to the percentage tables is because somebody's highly compensated. So let's just try one of these. This is going to use the wage bracket table. So I've got a gal who comes to work for me, and I quote her an annual salary of $40,144. So she's paid bi-weekly, and her W-4 says she's married with 4. So first off, tell me what page you think you're on to look up the taxes. You gotta look at those little squares and find the one that says bi-weekly and married. What page are we on? Okay, T8. Once you figure out what her bi-weekly salary is, how many times a year is she paid? 26. You're going to go across the column heading to the number of withholdings, and then read down the rows till you figure out where her salary is, and that's the amount to withhold. First, you might need another piece of paper because those numbers are tiny. You're going to put underneath. The first thing you need to do is figure out how much is her gross. These aren't the new, there are newly published tables, yeah, on IRS.gov. But honestly, if we start going off of the book, I think it's going to be more confusing than anything. Yeah, the bottom line is you know the process. So if you just look it up on the table, what do you get for it?
right? Everyone get that? Okay, next person. So this is easy peasy, you just gotta get to the right table. Right? And use, like I always put another piece of paper underneath it so that you don't get a row off. Okay, second example. Now I have a guy who earns 84,400. Go try and pull his federal income tax with, and he's also married, so I guess we're on the same page. Got 2 allowances. See if you can go find his FIT withholding. What's the problem with our buddy John? He earns too much money, so where are we? Now what do we have to do? You got to go to pages T2 and T3. What's the first thing you have to do on, how much is his gross wages again?
32,46.
Right. First thing you got to do is go to that table of allowance values and subtract whatever number they give you for biweekly times the number of exemptions he has. How many exemptions does he have? 2. So whatever the number is in the table, you got to subtract that times 2 from his gross wages. So did you subtract $319.20? Yeah, okay. Now the key is you've got to take this number to page T3. Which chart or table are you in on page T3? 2B, right? Biweekly and married. And the key now is, you've got to read the column headings, and it tells you if this number is between 2 parameters, then go do this algebraic statement. So I want you to find that and read it to me. So it says if you're between what and what?
1,177 and 3,421.
3,000.
421.
Right. If this number that we just calculated here is between such and such, then FIT is equal to, James, what does it say next? If it's between these two numbers, then your federal income tax is equal to $73.30?
Yes.
30 cents plus what? 12% of, I think if you read the top of that column, it goes of the excess over.
2069. Is that from the 3246?
It's the number we calculated here.
Yeah, I figured from
73.30 plus 12% of the excess over 1177. The excess of what? This number. So calculate this part first, and then add it to $73.30. So it tells us that we have to pay $73.30 plus 12% of the excess of $2,926.25 over $1,177. Do this part first, and then add it to the 73.30. Okay, for Wednesday, here's what I want you to do. There's 2 more of these, examples 3 and 4. You need to practice those on your own. Number 3, another really high-income person. Number 4, not a high-income person. And we'll meet, so if you guys can do 3 and 4 on your own, and the review and discussion questions. Actually, can you, of your syllabus, what do you have for practical problems? I think you just have a couple of them.
It is probably 1, 2, 3.
Yeah, why don't you do all your homework for Wednesday? So first work those 2 examples. Then do your homework for Wednesday. We'll go over that, we'll reinforce, we'll do more of these. You have to be able to use these tables. Now let me just see really quickly in the last 30 seconds if you can pull everything together. If I gave you a problem now where I said, this person, everything's the same, except for he's putting in $1,000 a month into his pension, what would you have to do before you go to the tables? Subtract 1,000. Yeah, good. Yeah, good. There isn't just a straight 10%, you go to the tables. Okay, cool. Have a great couple days, get your homework done, and make sure to go over those other examples, please.